Welcome to my third video about Fibonacci tool. And in this video, we're gonna learn about Fibonacci, the second tool. And the first one is Fibonacci retracement. We already talked about that in video number 2. Now we're gonna talk about the Fibonacci expansion. That's another tool, and we got it out from hidden place and out here, right? So this is, if you put the cursor here, you will see the Fibonacci expansion. One more time, if you're not, if you missed it or if you're not aware of it, where it is or where it come from, then you see this tool, Fibonacci retracement. You right click on it, you see customize, you click on that, and then you will find it here. You highlight it, and then you press insert, and it will come on this side. This side means all of these tools are available on the action line. So this is how I got it here. So this Fibonacci expansion is on the right hand side. So now it is shown up here. All right. So that's how any tool you need, you bring it to this side. Okay. So you will have it. So I have it already. Now, what is the purpose of this tool? We already saw that this tool we use for retracement. If this is wave 1 and wave 2, we want to see if it is 61% or 78% or what the heck is that, right? So let's see, if we draw the Fibonacci retracement tool, we notice that this is 50%, then it went up to 23% line, then came back down to 61%, and this is one of those two most important number for a reversal or retracement, completion of the retracement, right? So 61% or 78%, those are the two important numbers. So we touched 61%, and then posted a hammer, big wicks, couple of wicks in the bottom that shows that we are about to go to the upside, and then we did, right? So there's one more. I mean, I just in the second video I said that to find the target, you can flip this and then find the extension, which extension numbers 127 and 161, right? Bring the number close here. So if you notice that we hit this 127 exactly, right? Then drop to this high here. Then we went back up, and then we went even higher than 161. So anyway, we end up with 161. So this is one way to find the target and a move going forward in the previous direction. So it's wave 1, 2, and 3 goes beyond wave 1, and this is one way to get that, right? The target, right? Now, another way is I talk about very, seldom about it because, well, let me just show it to you, okay? I don't use it very often, but it's there. What it is the same tool. We use it differently for the target. You have negative numbers in the tool. eur-usd, we're going to go and pick it up from my fib template, which is right here, right? So this is the regular positive number 2, but this 2, you can see that this one has all the positive numbers plus some negative number on the other side. So we're going to take this, highlight, select, and then a couple of times, and now I have it on my cursor, right? We're going to go back on that 4-hour chart here. Now, if I draw the fib, it will be that one with the negative numbers. So let's see. I'm going to draw this fib again the same way for the retracement, but negative numbers will be coming here on the top for target. Okay, let's take a look how it is. You're going to draw this, right? I'm going to keep it here so that we can read. So see this high here now. So that retracement is again 61% exactly, but notice that 61% produced the negative 1.618. Simple as that. This is the best way to find the target. Let me remove, let me just do this a little bit here. Oh, well, what the hell with it? Okay, so you see that? So this is what it is. Write it down, or you have it. Let me see if I'm recording. Yeah, I'm recording. So you're gonna have a recording, but you can write it down as well. So if you're using this fib with the negative number for target, that's another second way, and then I'm going to show you the third way as well with the different tool. With the retracement tool, with negative number, you can find the target. And what are the rules? The rules are, if you pull the fib from here to here, then if you see the retracement, if it is 61%, then the price usually 90% of the time will go back to negative 1.618. Okay, from 61 to minus 161. Okay, that's how it usually happens. So that's the rule of thumb. That's the rule, right? And if this retracement is a little deeper, let's say to 78%, right? So from 78, it usually ends up at 127, negative 127, which is right there. You can see it, right? So these levels, come into play anyway, but these are the two rules. If you have 61% retracement, then the extension goes to minus 1.618 from 61.8 to 161.8. And from 78%, it's going to go to 127% extension, right? This is how it is. So this is the target with the negative number. Now, another way, another tool for the target is the second tool we have, Fibonacci expansion. This tool is a little different. You cannot use this as a retracement, only for targets, expansion, right? So, and this one has 3 points. This retracement tool has 2 points from, let's say, starting and ending, right? Point 1, point 2. That's it. And then you have the numbers. This tool, Fibonacci expansion, has 3 points. For example, I have it in blue, by the way, right? So let's see this one here, right? So if you pull the fib like this, then you have point 1, point 2, and point 3. The reason is that you are going to measure the Elliott wave, the next new Elliott wave, wherever it is starting from. So we put this third point there at the starting point of that wave that you need to measure. And you have to place this point 1 and point 2 on the move or the wave that you are going to measure in relevant with. Let's say, for example, you want to see that how much is wave 3 compared to wave 1. So first we have to measure that, or we need to find out how much is wave 1, right? And then we will measure that, okay, compared to wave 1, how big the wave 3 is, right? So how we measure wave 1? By placing point 1 and point 2 in their position. So wave 1, starting point, point number 1. Wave point 2 is ending point of wave number 1. So this is wave number 1. And we know now the length of it, that how big it is, right? But the thing is that we need to know where the wave 3 is going to start or going about to start. So how far is going to go from the starting point. So the wave 3, we know that it is going to start from here where the wave 2 ended. Wave 1, wave 2, right? Then wave 3 will start from here. So we place the third point at the beginning of wave 3, right? Now, wave 3, you can say that, okay, this is this much compared to wave 1. Wave 1 distance we already measure in this, it's built in this tool. And wave 3 starting from here, and then you can see that we went straight up to 127 level. Okay, again, also this is also the same thing that when we go on the this side, the harmonic pattern side, you will learn even more and it will be more clearer. But for now, remember that this tool has targets, usually 3 targets: 100%, 127%, and 161%. Yeah, remember that 100%. We want to measure. Sometimes move ends at 100% and reverse. or sometimes it goes to 127%, which is in this case, or it will go straight to 161% and then drop. Okay, these are the three things happen, and this is how you use the tool. Similarly, if we want to know that how much is wave 5 compared to wave 3, right? Remember, well, that's Elliott wave. I'm just, I'm showing you. I don't want to get into the Elliott wave mumbo jumbo in this course. I'll make another course with Elliott wave. So to measure wave 3, then again we have to place the the first two parts on wave 3, starting and ending, which is see this one, the starting point of wave 3 is ending point of wave 3, and then we will place the third one in the beginning of wave 5 to see how much wave 5 is about to be compared to wave 3. So let's see. You see that? This is one. So now wave 5 is usually shorter than wave 3. So it usually sometimes end up at 61% or 78%, less than 100%. So in this case, this extension here, see this between wave 3 and 4, we have an extension, and we are about to reach the extension level of 161. So that's a retracement tool here. And then this tool compared to wave 3, wave 5 is already a little more than 61%, but 78% is just above this extended 161% level, right? So what we are getting is that this is the vicinity where we might be making the turn. So that's why I have this mark here, yellow mark. From here, the market is closed right now, but I said that from here it may go up a little bit, touch this, or even go higher to 78%, touch that, and then it will drop. It will drop, but somewhere here, right? So different numbers, different. You use this extension, and then you use this tool as an expansion to find the confluence, or and then draw the channel here, and different thing. SNR level is in there. If there is any, like 70.49 weekly high is there, but this is all-time high, so there is no higher level available for me to draw. So this is it, right? So, and I'm trying to get help from everywhere. So, I draw the channel. It's a very nice 3-touch channel here to the rising TL, but the lower TL, the upper TL, if I place the parallel here and here, it's way outside, right? Away. So that's perfectly fine. The wave 5 usually is very shallow and less momentous, and probably going to be turning from here. So now you know that this wave 5, wave 3 target, and wave 5 target. To find wave 3 target or wave 5 target, we use this Fibonacci expansion tool, right? So basically, or if you are measuring A and B, then for wave C target, if it's a correction. But anyway, it is not about the retracement, it is about the extension or expansion rather, to find the targets. All right, so this is how you use this tool. Anyway, we can go, let's say this one here, for example, and if I say that, okay, this from here to here, and it retraces here, right? So let's see how much is this compared to this wave, right? So let's see if I'm gonna put this fib here, from here to here, and then the third point from the beginning of the wave that we need to measure, and you see it is almost touching 161, almost, right? If you use this, okay, yeah, I am using this one, right? So, oh yeah, now see, it was a little bit off. So see, it is almost. I think it's touched that 161. Excuse me. Like I said, that I've been recording a lot, talking a lot, one-on-one. I'm doing the, here, there, every few hours. So my throat is always like that. So, apology, my apology. But I have to do what I have to do, right? So, yeah. So this is the tool, the expansion tool, to find target, right? For example, if this one is going to go up there, this one is supposed to come down here, for example, here, right? So we want to find the target. If it stays below this 1390 and then start to drop here, and we're expecting something here, we want to know how far it's going to go. So we're going to place this, and the third point will be, let's say this is the highest that is going to go, and then now it's going to drop. So now we can see that 100% is coming right here, 127 is coming right here, around 78% of this, right? And 161% is coming here. So we know exactly, where are the levels situated. And if this thing start to drop, then we are aware of the roadmap. Like I said, that these calculation, these Fibonacci mumbo jumbo, what it is telling you that it's the roadmap and how much each road is, how long and how big and how small and where it is turning and all of that, right? So it is very easy to deliver a pizza or something like that, right? If you have a job, if I have a job, pizza delivery, I get a job in a strange city. How do I do it? If I don't know the roadmap, I cannot do it. I need GPS, right? So if I don't have a cell phone or a map, I'm lost. But this way, you are not lost if you understand the fib. And trust me, this market or any market like gold, oil, or crypto, or forex, or stocks, and all of that, they all move according to the fib. They all move with very, very harmonically with the fib. Fib calculations are always there. We just have to find it. If you learn it, use properly, like I'm just showing you, and try, draw the fib here, draw the fib there, draw the fib everywhere, then you will see the confluence, and you will find that the price is literally touching the levels and making the turn. For example, this drop, and then look, it made a shooting star. This is the reversal candlestick formation. This big wick to the top. And what level it poked into? 61%, right? So usually it goes back to 23% line, and after that, either it's going to bounce or drop all the way. So I know exactly that maybe 90% chances that 1390 is going to hold and we're going to drop. And if we start dropping, then what will happen? USD will be getting weaker. And then what will happen? These pair will go up. So what I'm going to do is I'm going to switch this. These three pair will go down, and then these four pair will go up with the USD weakness, because USD on the right hand side on these pairs, right? So this is how you know exactly that what is happening and what to expect, and be ready, right? Now I have my this is US dollar index, right? For example, and this was it. Now, if I say that this is the chart, this is a chart I made on Friday, and this is what I'm expecting. Why? What is the reason? There are a lot of calculations that I did on the other computer, and this is one of them that you can see this extension level here. Boom, 161 right there, right? So it may stop. I'm not saying definitely it's going to drop, but it may stop and dip first before going to the upside, or maybe reverse the whole thing, right? That can happen. Similarly here, if I pull the fib from here to here to see that what happened, how far this thing went, so I'm going to use this Fibonacci expansion tool here, right? 0.1, 0.2, and the beginning of this wave from here. So I'm going to place the third point here. And you see that it went there, and it touches, exactly it touches the Friday, it touches 161%. So this is the calculation for wave 3, actually. We're going to learn that later on. Not in this course maybe, but Elliott wave course, right? Of course. I will be showing that, what is the calculation for wave 3 calculation, and theoretically is 161% of wave 1. So this is wave 1, this is wave 2, zigzag, and then straight up to 161%. So a market is always very, very calculated, right? And for wave 5 is usually 61% of wave 3. So if this is wave 3, this is wave 4, and this is wave 5. So if we know that, then let's see if I place this wave 3 point beginning point and ending point of wave 3. Wave 3 point, beginning point this, ending point this, and this. Then you see that this is exactly in between 61 and 78%, and it got stopped. So, like I said, market, if you use the tool properly, you will find that, man, everything is calculated, everything is very harmonic. Okay, so this is how you use this Fibonacci expansion tool. Some other example, for example, we go and then we take a look at, well, we already saw this. If we go on a daily chart, daily thing, let's see, hold on. Let me change the profile to daily, and I'm going to show you some other examples that how, for example, this wave, let's say this is wave 1, this is wave 2. So how far this thing went? If it is wave 3, it's going to go to 1.618. So let's see. I just shrink it so it will show up on the chart on the screen. So wave 1, starting point, ending point, or whatever wave is, right? So this is an impulse wave. This is a retracement. So you retracement, and then you notice that it went and it hit 1.618 is here, and the next level is 178. So yeah, that's the square root. Remember, square root of 0.618 is 0.786. So these are the two, either this number or this number. So perfectly, it went straight up to that. Right. So if you know what it is in Elliott wave course, you will see that I can see it really with my eyes, naked eyes, that this is wave 1, 2, this is wave 3, this is wave 4, and this is wave 5. Right. So all of that, with time, I can tell. But yeah, this is the tool to find the target. Any move, and therefore, so for example, you see this was lower low, so this was a drop, but then all of a sudden you have a big move. So from here to here, and then ABC correction, then how far this thing is going to go? Usually 1.618 we need, right? Okay, let's take a look how far it went. 1, 2, and boom. It's little over 127, little less than 161. The middle level is 141. That's what it is. If you take it from here, it's probably 127 only. Not even 127, not even 100, right? But yeah, so this was an ideal, well, from here, little straight, you see this wobble here? So from here, you can see that it is more than 161. So the ideal is that, this is how you go to the target 127 or 161 or in middle somewhere, right? But who cares if you understand all of this, that this is what happened, this wave 1, and then this ABC correction, and this is a pattern. This is a harmonic pattern. We're going to start learning from next video, right? So if you can find that out, that, okay, this is what it is, and after that, the move starts, and you make an entry somewhere here. A little move up, down, and you make an entry, right? Then if you know, now you know exactly that this may go up to 3 levels, 100, 127, or 161, right? So you draw the fib and you hold on to it. For 100 level, which is right here, you have 63 pip made profit. 127 level, you have 84. And all the way here, 161 never touched, but so 60 pip, 70 pip, 80 pip trade, easily you can get without any problem, right? Actually, I was, giving you an example, but this is a daily chart, by the way. So from here, if you enter from here, 100% is how many pip in reality? It is 630. So 600 pip, and then this at 127, you have 800 pip. Yeah. All right. So similarly to the downside, if you have this move and then the A, B, C correction, and then from there it's coming, and you need to know how far it's going to go. Again, you have in mind that 3 levels, 100%, 127, or 161. So let's take a look. If this is ABC correction here, then how far this one went? 127, right? First it bounced from 100, then it came down to 127, and then later on, it went down even more to 141. Just a little shy of 161, right? Similarly, I hope you understand this too, right? So if this is the move, how far this went? Maybe 127. Let's take a look. or 161, even beyond 178, right? So either it is 127 or higher, 161 or 178. So this usually this is called wave 3. Wave 1, 2, and then wave 3. That this could be A, B, C as well, right? Sometimes C is extended. So, but this is how you find the target using this tool. This tool you use only to find the target, no retracement. Retracement tool is this. You use this tool for a retracement and extension, right? And you can use that with the negative number for target as well, like this one here. So let's see if this tool I use, there is no third point, right? So from here to here, you can see that it came down to 70.7. Actually, it touches almost like 78%, right? And then it went all the way to bypassing every single thing. 127 is gone, 161 is gone, 178 is gone. Just keep going to minus 200. Means that this wave 3 is twice as big as wave 1. This is wave 1, wave 2, and wave 3 is 200% of wave 1. So it's double the size. Similarly, if you want to see that, okay, clearly this is wave 1 and this is wave 2, and it's dropping. So how far is going to go? Again, target is 161%. Let's take a look. 127, it came straight, right? Not 161, 127. That's our target. And then start wobbling here. So it's several days, it's moving around here. So you know exactly then it's not going nowhere, right? My weekly chart analysis helps a lot. So yeah. And other tool we use, the negative number with this retracement tool. So we're gonna notice that here it was a retracement of 61%. Then usually it goes to negative 161. So we see negative 161 right there. This tool is also good, very good. So from 61 retracement, target is negative 161. For 78, target is negative 127. Right? 90% of the time, 90% of the time, not always. So need to be careful, but this is how you're gonna win the market, because you know what happened 90% of the time. Okay, so this is how you use the third tool. Just wanted to show you guys and then explain that. And this is usually, we use in Elliott wave calculation, right? So, but it is good to know that, this is the tool, even though if harmonic pattern, you are going to use in the harmonic pattern as, as well. But what some of those pattern requires this tool as well, right? So we will see. So it's good to know, right? So this is it. This video is going to be, I don't want to touch anything else in this video. So we covered the first video. We cover all about the Fibonacci tool, the numbers, how the tool is built, and where the number come from, and all of that. Then second video is that how to use it as a retracement and extension. This tool, the first one, right? And then this video, we learned that we use this tool. What is this? This is Fibonacci expansion, and it is used to find targets, right? After the retracement, the continuation start, and we look for the target, and the three targets, one is 100%, the second one is 127, and third one is 161. And we can also learn and find the target using the Fib retracement tool with the negative numbers. In the negative number, the targets are, if the retracement is 61%, then the target is negative 161%. And if the retracement is 78%, then the target is negative 127%. Okay. So I think that I'm going to close this video. And hopefully from the next video, we will start seeing the harmonic pattern. What are they? One by one. Each video, I will explain one pattern and then show you how to take the precise entries as well using my system, right? But if you don't have to get the system. You just take this course. You already took it, right? And learn it and use your own system if you have it to make the entry, right? You don't want to make the entry. As a lot of people make mistake that if they think that okay, this and this and just open the trade because it has the 61% without having a confirmation that is going to the upside, right? So what if it drop? You make an entry with the 50 pip SL and you drop and take your SL out, lost 50 pip. But I have a system where I will wait that even though I see that 61% is touched and the price is bouncing, I want to know exactly that it is going to the upside. I want to make the confirmation, make sure that it's going to the upside, and I have a system of that. And once it starts to go in that direction, for example, that system, let me show it to you. For example, pound yen, if I open pound yen pair, and that entry system from any turning point, how is it? Or what it works? That's entry chart is my 20-minute Renko chart, right? So this is what it is. So see, this is drop, 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 drop. This is for, let's say it's a retracement, right? Let me just shrink it here. Now, if we see from here to here, then how much is the retracement, right? Okay, so let me show you. From here to here, how much is the retracement? 50%. You know, I said, you know, these are the 90% of the time, but sometimes it make the turn from 50% as well. But if this is 50%, but you can, if you take this point here, it almost like 61, well, almost, but in fact, it's a 61%, right? From here. What the heck? Not from here. Right? So it's almost 61%. Okay. So from here, it's gonna go up, right? Extended levels. So okay, the idea is that it will go. Sorry. So we need to make an entry, right? There's a lot of people, like I said, that they will just blindly open a trade here. Well, in this case, it was good because big move to the upside, right? But I don't do that. I wait for my long setup, which is coming here in this area. Right? So I understand that, you know, it moved, it's all blah, 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 everything. And then this is my long entry. 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 My system, I have to have 4 conditions met before I pull the trigger. So I could have opened the trade anywhere here. Let's say the last one, here or here, I had this trade, by the way. So how many pips? Let's take a look. From here, 100 pip trade. Anyway, but this trade is a confirmed trade. I'm not just guessing that this thing is probably going to go up because it, you know, it touched the 61% or came very close, right? No, I want to see that it is really going to the upside. Then with this move, I know exactly that, yeah, it is going to the upside. And then all the EMAs are aligned to the upside. Now I know that it's, you know, it's become bullish. And then, you know, this indicates all the way down and the red candle turned blue. I have my setup. I open the trade, and as soon as you can see that if I open the trade here and I place my SL here, my SL is always 25 pip in these entries, always fixed 25 pip with this setup, right? So my SL never hit with this entry, with this entry, with this entry, with this entry, with this entry. As soon as I make the entry, the price goes up, right? So this is how my entry system is. Anyway, so we learn about the Fibonacci completely now, right? Retracement tool, expansion tools. So we know the retracement, the extension, and expansion, right? And also use the negative number fib as well for targets, right? So let's move on. I'm gonna close this one now. Watch a few times, and if you have any problem or anything, if you don't understand, sorry, I have hiccups. So the email support is always there. You know, you bought the course, fine. You know, but I will be there to you know, explain things if you still don't understand anything, right? So you're welcome to email me, and I will reply back and explain whatever need to be explained. All right. So bye for now, and have a wonderful, wonderful rest of the day.